Hello, guys. Welcome to another inciting episode. Uh, my name is Sunday, and I welcome you all to Against FX. All right, so guys, today is day 21 of September, year 2025. As you all know, I'm offering a 1 month free course to those people who are interested in learning how to trade. There are so many people, they want to trade, they want to learn how to trade, and they don't know how to go about it. And apart from that, they don't even have the fund, the money to pay for course. All right, so it's just a giveaway. All right. If you go to my website againstfx.com, you will see we have prizes for mentorship, but I am just giving it out 1 month course for free. And I bet you if you follow my channel, subscribe, go to the playlist beginners free course, all the videos that are there from the beginning, watch them to the end. I bet you will learn, you will just know how to trade. All right. So without wasting time, today I'm going to be teaching you guys, and this is what most of you are waiting for. As I tell you, this topic is not just for beginners alone. So many people have been trading for a very long time and they are still battling with timing, entry timing. The topic is how to identify the right moment to enter a trade. All right, entry is always the problem of traders. They don't know when to get involved in the market. All right, it's a very big issue. All right, they will know every strategy, know everything, but the real time need to get involved in the market, usually the problem. That is why people are making mistakes. So today I'm going to be treating this topic, and I want you guys to sit back, grab a cup of coffee if you have any. Make sure you have a pen and a paper. All right? Make sure you bullet point everything that I'm going to teach you. Is going to help you. All right? It's going to help you. That being said, timing is everything in Forex. I'm not going to waste time. I'm going straight to the point. Timing is everything in Forex. In the fast-paced world of Forex trading, knowing when to enter a trade can be the difference between someone who is making profit and someone who is making loss, and that loss will not translate to what? Regret. All right. This segment, this topic I'm trying to teach you will break down how to spot high probability setups, how to align with market momentum, and how to avoid emotional entries. All right. Whether you are trading breakouts, all right. Breakouts simply mean when there's a consolidation, you wait till there's a breakout. Let the trend give you a hint where it wants to go. Because once there's a consolidation, once the period of consolidation, that means the price is not trending up and it's not bearish, it's not bullish. So it's just at a particular level. Wait for a breakout from that level, then price will tell you where it wants to go. So whether you are trading breakout, reversal simply means once price is going up like this, then you will now reverse and become bearish. If it's going up, reverse and become bearish. Even if you are trading reversal or trending markets, I got you. That is why I'm here to just put you through. It's not, you didn't pay me anything, so don't just believe maybe you pay me. That is why I'm telling you this. I just a free will. I'm just telling you guys, I'm just from what I have learned so far, I am giving it back to the society. All right. So mastering entry timing will help you trade with confidence, not a guesswork. All right. Because most traders always do what they do is guesswork. They don't even know the actual time where they will take position. They don't even know. Not to talk of the beginners. If you're a beginner, you don't just jump in. All right. Like for example, they say this is the level of price here now. Do you just jump in here? No, you don't just jump in here because right now, if you look at this level, you discover that there is a resistance very close here. When price get to this level, anything can happen. It can turn back and start coming down. So what if you now enter from here? What happens? You not say, oh, trading is not good. You are entering at a very wrong timing. So learn to wait for confirmation. It's very important. Learn to wait for confirmation. All right. And then respect your strategy. All right. The third one is patient is the key. Like I tell people, you must go buy a garment of patience, wear it for you to be a successful trader. All right? For you to be a successful trader, you must wear what I call garment of patience. You need to be patient. You need to be patient. There is no way as a trader, you need to be patient, very big patient at that. Because sometimes a day you might don't, your setup might not come. Maybe second day, nothing, third day, nothing. So, and if worst case scenario, sometimes in a week you might not even have a trade. Does it make you a bad trader? No, because your type of setup did not show up. You see the kind of patience you need to have for you to be successful. But once your setup forms and all your criteria met, no hesitation. You don't need to start thinking again. Once your setup, you see your setup and there is confluences, all right, all the criteria met, you need to take the trade without wasting time. That is how you trade. All right. So let us dive in because this is more of practical. This is more of practical. It's not theory. This is more of practical. Right now, this is, we are going to tackle this episode, this topic in a way as if we are doing our top-down analysis combined. We will mark our structure. Then we'll now, as we progress, we will now scale down to where we take the time frame we take our entry. Then we will now see, we'll be able to identify the opportunity for our entry. All right? the opportunity for entry. Guys, stay back and watch me do it. It's a very simple thing, but if you don't know it, it becomes complicated. All right? It becomes a very complicating something. So the first thing you must know is go to the higher time frame monthly. Monthly is what will tell you where the market is going. Is the monthly. Anywhere the market wants to go is the higher time frame that we always take the lead. Whatever happens on the lower time frame is going to align. Or the lower time frame, when I'm teaching time frame correlation, you understand, you understand it better when I'm teaching you guys time frame correlation, because until the lower time frame aligns with the higher time frame, there is nothing going on. Price will just be boost, back, going up, coming down, going up, coming down. When it now aligns to the higher time frame, when the higher time frame is ready to push, then you will now see a massive movement. Those are the levels, those are the movement you should be targeting for you to be profitable. And those movements, they are amount of pips. Sometimes your setup can come as a swing trade, meaning that you hold that trade, you enter that trade, you let it run overnight, maybe 2 days, 3 days before it gets to the TP. All right? Sometimes your entry can just be okay, it's just a day something. So you can be a day trader and still be a swing trader. It depends on the setup that presents itself. Without long talk, guys, this is higher time frame, monthly. So if you look at this structure now, you discover that from here, like this, is downtrend to this point, right? You can see that is breaking structure to the downside. You can see it's very, 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 very clear. All right? So now that you have identified that it's a bearish trend, all right, from the higher time frame, all right, now you now see that something is happening after this low here. You now see that price now pushed to the upside, created a resistance here, pull back. Instead of price pushing below this level, look at what price did, like this. Instead of price pushing below this level to give us another low, it stops here. But what now happened? Price now push up, violating this resistance. It tells us that, okay, once a resistance is violated and of which we are on a bearish trend simply means price breaking structure to the lower side, breaking structure and is going to the downside. When it's breaking structure to the upside, you know that it's bullish. But anytime you see a trend breaking structure to the downside, you know it's a bearish trend. If you have not watched how to read structure, how to read market structure, please go and watch it so that you will understand it. Like I told you guys, the things you must learn and you must make sure you know it like back of your palm is how to read structure, how to perform top-down analysis, all right, how to perform top-down analysis, how to read structure, all right, then your timing, where you need to get involved in the market is very, very important. And apart from that, you must know all those candlestick anatomy, the story behind candlesticks. As they are printing, you already have idea of what is going on between the buyers and the sellers in the market. And if you have not watched candlestick anatomy, the important candlesticks that you need to watch out for as a trader, I've already treated that. Go, it's for free. All you need to do, go there, go to my YouTube channel Against FX, go there, all right, subscribe, just subscribe. Once you have done the subscription is free. Just subscribe, click subscribe button, go to YouTube, click subscribe button. Once you have, okay, let me show you guys. All you need to do is click your YouTube, go to YouTube, all right, youtube.com, open it, then go to where you have search. You do now type Against FX. Once you type Against FX, click enter. Either it's your phone or your laptop, you see Against FX, you see Against FX. Once you type it Against FX, you just click subscribe, finish. Subscribe, finish. That is what you need to do. Subscribe, finish. Once you have clicked the subscribe button, go inside. Then you will now go inside and you will see playlist. You see, once you click on this playlist, you see we have a beginners free course. Beginners free course. Click on this point, on this playlist, then you see plenty materials for beginners from the beginning to when you now start trading on your own. And all these things you are going to learn right in the comfort of your home. You don't need to travel to anywhere. You don't need to go to any class. Your class is what I have already put together, put here for you for free. For free. All right, so guys, please do that. All right, do that, subscribe, and that's all. If you after your subscription, you start watching the video, if you cannot comprehend, like I told you guys, just tell me the topic you're having issues with. Drop a message. Go to againstfs.com, all right, send me message, an email, or better still, use that YouTube, drop a comment. Just tell me, oh, I'm having issues with this topic. Can you please clarify this? And I will gladly do that. All right? Okay. Now we have seen that price, this one here, is the last break of structure. Last break of structure here. We have seen that this is the last break of structure. Look at it here. Mark it. Because most people don't even know what break of structure is all about. All right? This is the last break of structure. Then what now happened? Price created this push to the upside, that is resistance. Now, the other flow, price supposed to push to the downside, right? For us to have another lower low. But price now gave us a price now gave us a lower price now gave us a lower high. It now gave us a higher low. Excuse me, sorry, please. It now gave us a higher low. All right. This is a low, this is a higher low. Now, price now created this support level here. It now push to the upside, breaking this level. Now, when you look at it here, you will discover that this point is supposed to serve as what? Supposed to serve as market shift, market shift, market shift, or change of character, market shift or change of character. Now, there's one thing that we need to plot. which is psychological level. A psychological level is a level where buyers and sellers will wait for price. As soon as price get there, they will start buying or selling. And those levels always end with 000, like 10,000, 9,000, 5,000, 6,000, 7,000. Do you understand? Okay. So we start marking it from here. All right. Let's say here, the round figure, the round number here, let's start with this level. Let's start with this level, and let's see the round number that is here. Go to coordinates. Let's put 4, 1, 2, 3. Okay. This is 1.04000. If you click it, you discover that it rhymes with this support level. All right. The next one, you are going to change this 4 to 5. All right. We are going to change this 4. Okay. The next one here, no, let's go to weekly so that we can start marking it. We'll start marking it from weekly. It's better marking it from weekly. All right. Let's mark it from weekly. Even if you mark it from the monthly, is still okay. But let's start by marking it from, let's start our marking from the weekly time frame. Now, when we say monthly, we are simply saying one candle represents 1 month. When we say monthly, weekly, one candle represents 1 week. All right. So this is for 1.04 thousand. All right. We have 1.05 thousand. We have 1.06 thousand. So let us jump to 1.10 thousand. Let's jump to 1.10 thousand. All right. Let's jump to 1.10 thousand. 1.10 thousand. 1.10 thousand. Okay. 1.10 thousand. You see resistance level here. Okay. Then 10,000. We now need to jump to uh, uh, 11,000. We now need to jump to 11,000. 11,000. 11,000. Then after 11,000, we have 12,000. Guys, you know that you won't understand this, but I bet you these are psychological levels that when price get to, there must be a reaction. All right? There must be a reaction because why? Sellers and buyers are there waiting for price. All these are psychological levels, and when you plot them, you discover that price will always respect those levels. All right, and when you look at the structure, you discover that price will always respect those level on the structure, on the market structure. Then the next one is what? The 13,000. 1.13 thousand. All right. Then the next one is 14,000. 1.14 thousand. Somebody will say, how are you getting it? Now you just pick your horizontal line too. You just put it on, you put it here, double click it, it will open, then go and click on coordinates. You see? You now change the number. Once you check this 1.15,000, if you click OK, it will just tap that place. If you look at it here, you see 10,000, 11,000, 12,000, 13,000, 14,000, 15,000. So if you bring your ruler here to measure it from here to here, what can you say? 100 pips. So don't just look at it as if all these things we are seeing, say, what is this? 100 pip from one point to the next point is 100 pip. Then I will show you something very, very interesting. Let us mark this thing. Let's finish marking it. The next point here is what? 16,000. All these are psychological numbers. Psychological numbers. After 11,000, after 16,000, we have 17,000. All right. So we have 17,000. Just change all this one to 0, 3 zeros. All right. Click OK. Then the next one here, the next psychological number is 18,000. 18,000. The next 1, 2, 3, 1, 2, 3. The next psychological number is 18,000. Then after this, the next psychological number is 19,000. You see? Price rejected from here. You should understand that all these things are no play. All right? And then the next psychological number after this 90,000 is 20,000. Is 20,000. So after 20,000, we have 21,000. 21,000. So this, we are going to leave it like this. All right, we are going to leave it like this. And if we like, we can even remove some from the downside because price has already moved above this level. So we leave this and this because, okay, let's even remove this as well. Let's remove this as well. Okay, we are starting from here to this. You can see price push to this level. When price took off from here, you see, when price took off from here, what happened? It pushed up to this level. But in between, one price got to the next level, it rejected, it made a pullback. It pushed again. How many this thing? It got to this level, that's about 200 pips. That is 200 pips. It now got rejected from that place. It came back to this level. It now pushed again. So the idea is that any time price got to a resistance level, all right, and that resistance level usually is a psychological number. Like I told you guys, sellers are always waiting at a resistance level, which is what? A psychological number. Once price get to that level, they will start putting their order to push the price down. All right? And as price is coming back to this psychological level, buyers are there offloading their orders to push the price up. That is just the secret. All right, it will move once it breaks one psychological level, it's going to get to the next psychological level. I think it's making sense to you guys now. This horizontal line. Once it breaks, like here now, what it's doing is a retracement. If it start pushing now, it's going to break above this level up to this level. Even it can break above it. If the sellers that are here are stronger, they will return the price back to this level. Okay. Now we have marked this, and I told you guys these are psychological numbers. All right, those numbers that always end with 000. But in between, we have 500. So you break between 14,000 to 15,000, you break it half. Sometimes price will come to the halfway. That is the retracement. Let me just show you guys one example. Like, okay, I'll use this one now. I'll use this horizontal rail. All right. Then between 14,000 to 50,000, we have 14,500, right, guys? Okay, let's put it here and do what we know how to do very well. So we are going to change this 14,500, guys. Don't forget 14,500. Once we click OK, look at it. Where did this stop? This pullback is stop here, halfway. All right, halfway. All right, so it's like that. If you even say you want to do the next one, take this. Let's do it here. Not be like, okay, maybe he carry this horizontal, he put it there. That is why it stick. No, let's do it from here. Double click on it. Then between 15,000 to 16,000, what will you get? Guys, drop it at the comment section if you know. Between 15,000 to 16,000, what will you get? Well, the answer is 15,500. So let's put 15,500, right? Let's put 15,500 and we click enter. What happened? This is where it got to. So you see this pullback got to this halfway. That is when somebody can say this pullback, if it breaks this 16,000, the next level will be this 15,500. All right, and if it breaks below this level, the next level will be this level. So you can now see how you can say, just men looking at it after marking your structure, you can ask, okay, price will move from here to this, from this level to this level. And when it's returning, it should return, okay, from here first, return to this level. There will be a reaction, but if it breaks below, it's coming to this level. Guys, do you understand? So let me remove all this, the halfway, but you now understand what I meant by that. So the next thing we need to do is that we have a break of structure here. Let's mark it, break of structure here. BOS, anyway, CBOS is what? Break of structure. Then this break of structure, the next thing, let's clone this. Instead of bringing it out, just right click, you see clone. All right, that means it's just form of duplicate. This is another break of structure. All right. Then what we need to do now is to scale to daily time frame. Let's scale to daily time frame and adjust our markings very well. So you can see now, let's just remove this because the price is, this side is far. Like I told you guys, you don't need to go too far, all right? You don't need to go too far when you are doing your analysis. After today, you should be able to do your own analysis, know where to wait for price. It's not a rocket science, guys. Don't complicate things. If you complicate things, you'll be doing the wrong thing. And I always tell people that are following me that If you are struggling, that means you are doing the wrong thing. Learning how to drive, once you know how to drive, it becomes enjoyable, it becomes fun. Anything that you learn, once you acquire the skill and the knowledge, it becomes fun, it becomes part of you. All right. So now this is a break of from the higher time frame, not lower time frame. You see all those small break of structure, all these are from the lower time frame, guys. The real move is this. The real move, let me show you guys. The real move go is this. This pull back to this level, this move is like this. Then the pull back to this level, forget about this one you see. Then the next move was this. Now we are what? In a pullback phase. We are in a pullback phase, guys. We are in a pullback phase. I'm opening your eyes. I just want to open you guys your eyes so that you understand what is going on in the forex market. When people are making millions, it's not a rocket science, but you need to still apply patience because for a trade to run from here to this point, all right? For a trade to run from here to this point is not just one day. It takes time. And when you see some volatility in the market, it should not bother you because you know that there's what we call point A to point B. And how do I mean by point A, from point A to point B? There's what we call, oh, you guys need to pay me heavy money for opening your eyes. This is what we call sell side liquidity. This is what people charge you 1,000, 2,000, different amount for. But I'm just giving you guys for free. This is a sell side liquidity, and we have a buy side liquidity. All right, okay, let's use this side. Let's use this side because this is the most recent one here now. Let me remove this. This is what? Buy side liquidity. Ask take this video, show even your mentor. Let your mentor even watch it. If you have any mentor, let your mentor watch it. All right. And somebody that has been trading for years, let that person watch it and tell you whether what I am teaching you is wrong or right. And just it's just for free. All right. Here is what? Sell side liquidity. You see? Price move from here, pull back to this level, psychological number, and is now pushed again to this level, psychological number, and it rejected. Is coming down. This is pullback phase because we have two phases in the market. We have the push phase and we have the pushback phase or a retracement phase. Don't get involved in the market when the market is in a retracement phase or pullback phase. If it's a pullback phase, that means you just want to trade the reversal or a pullback. Yes, if you just want to catch some pips just to scalp, all right, you can take it, but be very careful because you never know when the price or the trend will change. All right. So this make sure if you want to really cash the real money, wait for the push phase. Wait for the push phase. Now, once you see that we are in a pullback phase, on the lower time frame, you just see price going up, going down, going up, going until it now aligns. with the higher time frame before it now start pushing to the upside. That is where you see correct move that you can catch like 500 pips, 600, 1,000 pips, 2,000 pips. But it's not just going to be one day, that will be swing. To swing trade simply means holding your trade more than a day. As simple as that. If you're a day trader, maybe you hold your trade just a one day. Before the close of business day, you close your trade. You have scalper. Scalper, their own is based on pips. You can 10 pips, 5 pips, 20 pips. They are okay. They are out of the market. Do you understand? So now you can now see that once price pull back, it creates a support level. All right. Once that support level holds, what will happen? Buyers will now start pushing the price. All right. As they are pushing the price, the target is this level. Is going to take this buy side liquidity. Now, I'm showing you something. From this level now, he has given us a high, just like the previous high. Now, the previous high has been taken out. Now, this is now the highest high. Now, we are on a pullback phase. Now, this pullback phase, if you watch it very well, you discover that there's a resistance here. Our price is pulling back to this level. That is why you are seeing some uh, um, reactions now. And this pullback phase has been able to break through this 18,000 psychological number. It did not hold. Now it's coming down. The next point here, the next line here is 17,000, right? It's 17,000. Don't forget I told you guys, in between all these psychological number, in between 100 pips, we have 50, which is the middle. Now, if I carry this thing here, okay, let me not put it here so that you people will not say, oh, maybe he's doing magic. All right. If I carry this tool now, and between this where the price is, right? This where the price is now. The price is here. All right. The pullback phase is here. Now, between 17,000 and 18,000, we have 17,500, right? Okay, let's put this to go to coordinate 70,500. That is what we are going to type. 70,500. All right, 70,500. Let's click it. Now, you can now see price has already broken even below. It has already body breaks it. All right, that means that this one here is not holding. All right, so the next point here is 17,000. And right now, another confluence, the confirmation that you need to also apply is you bring out your Fibonacci retracement tool. If you don't know what Fibonacci retracement tool is all about, please go and watch it. I've already treated it. You start because we have a range. This is the price range from this support level to this resistance level. This is a price range. For you to be able to apply Fibonacci tool, you need a price range from the low to the high. What do I mean? From the in a bullish trend, from the support level to the resistance level. All right. This resistance level is established only when price starts pulling back. When you now start seeing opposite candles, all right, we now know that the pullback has started. So what you need to do, because we are in a bullish trend, we have established that we are in a bullish trend, then you now put your 100% level from the you now put your 100% level at the support level, then the 0% level at the resistance level, where price stopped and it now starts pulling back. You put your 100%. This negative 27.00 it's a level where you take your profit. So let me not confuse you guys. Let me remove it so that you won't get confused. Let me deactivate it first. Let me deactivate it. All right. Okay. Now you can now see that from this 0.0% to this level, now price is coming down, pulling back. Where have price gotten to? This level is 23.6. This a continuation. It has broken it. Now the next level now is 38.2. But that price will, if price gets here and it found support very close to this 17,000, all right, it can now start buying. All right, now people, buyers are holding on, I beg your pardon, holding on until this price touch this level. As soon as price starts touching this level, what they will do is start offloading their orders, start buying. They want to drive the price up. But as a smart trader, we have what we call a discount level, and we have what we call a premium level. Now, if you want to buy something, cheap so that you can sell in a higher price. So, as for me, at this point, the price is still expensive. It's too high. I want the price to still come down. And where is the discount level in Fibonacci retracement tool is what? Is from this 50 to 100. All right? From 50 to 100. Now I will wait patiently for price to now pull back into, once it breaks below 50, I can start buying. All right? And if I still see the momentum, I can even wait to what we refer to as golden ratio in Fibonacci ratio. That is 61.8. I've already explained this on Fibonacci. If I want to buy cheaper, if price tap into a discount level on bullish trend, when you are bullish like this, from 50 to 100 is what we refer to a discount level. That means you want to buy at a lower price so that you can sell at a higher price. Now, if the reverse is the case, if it's bearish, you want to buy at a premium price. You want this price, you want to buy at a premium price. That is a resistance level between 50 to 100. That means you have to flip this. All right. If it's a bearish trend, that means you have to start your plotting from up. The 100 will be up. Then the support level, you now put your 0%. That means you want price to pull back, all right, into a premium level before you sell. Anyways, if you are not getting it, please go and watch that topic where I treated how to use Fibonacci. I explain everything. But let's go on. As far as this is concerned, now I see that it's coming down, right? It's coming down. One day finished, I did not get a trade. This is second day, I did not get a trade. This is third day, I did not get a trade. That week is gone. Then the next week we are going to enter that we are starting to 9th. As at the time of recording this video, now doing this is in Europe is 7:17. All right. By 11 p.m. to 9th or 10 p.m. thereabout, market will open. All right. Market will open. Forex market will open. All right. So me, I will just be patient. All right. Because the real pullback, all right, that is very, very effective and that will move, that will give you the real pips that you need. Once you collect that, you are okay. It must be the move that will push into a discount level. And where do we have discount level? From 50 below. So If it is, once price tap into 50, this 50%, you can start buying if you like. All right. But I will still wait for more confirmation. All right. Because sometimes once you tap into it, you will still want to push below to get to 61.8, which is the golden ratio. All right. But in between 50 to 61.8, please, once price gets there, you start buying. That is it. You start buying. But for you to be very, very conservative, all right, as a good and professional trader, wait until price gives you this kind of rejection, pin bar, rejection. It shows buying pressure. And once that pin bar close, or maybe a bullish engulfing candle, a bearish candle, then bullish candle now come out, it will now close above the bearish candle. I've treated all those important candles that you need to watch out for. Once you see all those, it's another confluences. All right, it does not mean that, okay, once price get to 50, you just start offloading. No, you don't trade blindly like that. Price can decide to push up to this 78.6. It's not out of place. It does not mean, okay, it's now bearish. No. It can start, it can even go below 78.6 up to this level before it start pushing back to the upside. Yes, it's not out of place. It's only when this level is violated, when this support is violated, you will not say change of character. As long as it's within this range here, it's still a bullish trend. It can still reverse. So guys, for you now, the right entry, that is the key. You must wait for confluences. Use your Fibonacci retracement to look at the levels. Once after I've plotted this, now I'll just leave it. I'll now be watching. If you get to one level, it breaks, and my psychological level, my psychological number is there. That is one confluence. The Fibonacci retracement is another confluence, and I want this to push into a discount level. All right, that is another confluence. Then I will not say, okay, the price has tapped into my discount level. Should I just enter? No, I want to see buying pressure. A candlestick like a pin bar like this at a support level, a pin bar, a rejection like this at a support level, or let price give me a morning star. A morning star, remember, a bearish candle with a doji candle, then a bullish candle. Let it give me a morning star or a bullish engulfing candle. All right? Once I see that, then I will enter. Only then will I enter. Even if it pull into this discount level, I tell you for free, I will not take entry. I know that, okay, it has entered the area of interest. That is a discount level. Any moment from now, price can reverse and now start buying. All right? Yes, people are offloading. Some people will buy cheaper. Some will buy at a different price. It's normal in the market. But if you know what you are doing, you wait until let price be ready. I'm telling you for free. You don't need to trade with emotions. Let price be ready. You have already marked all your levels, the psychological numbers. You have marked the levels. You have already plotted your Fibonacci retracement too. You are watching the retracement. Let the retracement pull back into a discount level. Now, that does not mean that if price get to this level now, 38.2, that it cannot reverse. It can reverse. But what will make it reverse is because he has given you some candlesticks that will tell you, okay, this is a reversal. If it gives you a buying pressure candle, that is a pin bar, yes. If you look at it, this point, there is a psychological level here, number one. Number two, there is a resistance here. You see, 1, 2, 3. There's a resistance here. Price tested it, it dropped, it tested it, it dropped, it tested it again, it dropped before breaking above it. There's a resistance here. When price now gets here, it becomes a resistance that now turns to a support. That is another confluence. You now see uh, a morning star. You now see a morning star formation from here. All you need to do is that once that bullish candle open enters, as it start printing, you know that, okay, this is buying pressure. Then you can now enter. Without those things, all those confluences, guys, don't go and be throwing away your money. All right? The first thing you should always learn is how to protect your capital. How to protect your capital. That is the first thing you should learn as a trader. Don't just do away with emotions. Emotions, if you come into the market with emotions, you will just be shooting yourself in the leg. And it doesn't worth it, guys. So you cannot even see, without we going forward, you know where to even enter the trade already. You know how you will enter the trade. So you go, like me now, I take my trade 4 hours, all right? All I need, I've already done all the markets and everything. I'll wait for this price to pull into this level. I'll wait for price to pull into this level. All right? Once it pull into this level, my target, let's say now, price pull into this level, as it's going to pull into this level, then it gets a rejection like this. Then my target will be this very one here, the next one, or in between here. This one will now be 19,500. This 19,500. All right, this 19,500. 1, 2. Yeah, this 19,500. So it will be TP1, TP2. If he holds here, that means I will be looking at how many pips. Let's look at it. Let's say from this psychological number, 16,000. If he holds here, how many pips? That's 400 and that is about 400 pips. As simple as that. 400 pips. It's like that. It's like that. It's like that, guys. Because before, once price got to this place, if price should get to this place now, pull back to this level, this discount level, remember, this discount level, once price tap into it, all right, the next thing you should be looking at is for price to give you a market shift. And what is that market shift? Is price will do like this, get to this point, all right, pull back to create a resistance, come back to retest it, all right, then push, all right. Your own neckline now will now be this very one here, because you want price to break this neckline to actually tell you that, okay, this is a market shift for price now is ready to buy. As simple as that. As simple as that. Anytime anytime price wants to come, you must create a structure like this. You must first of all pull up, create a little resistance, pull back as if he wants to continue with the underlying trend, then price will now respect this support level. Then price will now start pushing to the upside, violating this resistance level. And once you see, any violation, there will always be a pullback to retest that level. It might just be one candle. It will break, then come back, then it will now start flying. That is how it is, guys. The way I do this analysis, open another, what do you call it? Another currency pair of your choice that you trade. Is the same thing, the same pattern. It's the same thing. It's the same thing. It's the same thing, guys. It's the same thing. It's the same thing. It's the same thing. So don't waste your money and don't all do the wrong thing. If you are doing the right thing, I bet you will enjoy trading. Make sure you do the right thing. As simple as what I've just showed you guys. Very simple. And this is how you make money from trading. All right. So I've just showed you guys that is the easiest way. Once price is moving up, as it's going from here now, once price found a support, as it's going, remember this is sell side liquidity, and this side here is buy side liquidity. Once it turns, the target is to take out the buy side liquidity to go and create a new high. Once it creates a new high, then price will now start coming back to the downside again. You will now start pulling back. That is how it is. That is how to find your entry. No more, no less. And before you before you take entry, don't be in a hurry so that you will not buy in a higher price. Even if you get in, if price wants to push below it, so that you won't get stopped out. All right? And at the end of it, once it now gets to a level, you will now turn. You know, I said it and now I'm out. No, you have to be patient. Wear that garment of patience. All right? It's very, very important for your own good. Stop being in a hurry. Stop being in a hurry. Use confluences like this psychological number. All over the world, the whole traders are watching these levels. All right? These levels serve as support and resistance. And once you plot them in a very accurate form, you always see that it will always go in line with all the support and resistance on your chart. Anytime price get to that point, there will be a reaction. Anytime price get to that level, there will be a reaction. What is difficult now for you to understand? As price is coming down, if it's bearish, then the sell side liquidity will not be the target. If price is bullish, if it's bullish, the buy side liquidity is always the target. That's why we say break of structure. If price breaks structure, he has taken a buy side liquidity. Then it comes back, all right? It comes back. As it comes back, then if it move again, it target the buy side liquidity. After giving you a new high, it will come back again, guys. Stop wasting your money. Stop wasting your money. If there's no entry, don't trade. So thank you so much. Because if I open another, what do you call it? I open another currency pair, it's the same format. It's the same thing. This work across all the pairs. So you just need to choose the pairs that work for you, that you like, and be trading it. So thank you so much, guys. I really appreciate you. I want you guys to comment, share this video, and as you do, subscribe. This thing I'm giving you guys for free. I'm not charging you guys anything. All right? As you subscribe, as you share my video, comment, God bless you all.